Welcome back. Let's get straight into this market picture then. It certainly was negative across most of Asia, and unfortunately things aren't looking too good out on that front either. So it stayed pretty much negative. But even despite that, though, the rest of the globe didn't actually follow through. It seems that there is an easing and a less resistance when it comes to things like the retail traders, who of course impacted the market ever so slightly, particularly out in the US and in Asia. So we're seeing positivity though for the rest of the globe. If we go even to Europe, we're seeing a 0.4% increase for mostly the DAX as well as the CAC 40 then, particularly out in Europe in this lunchtime trading picture. Only slightly higher though is the FTSE 100 at this point in time. So that really tells you where things are sitting. This positivity has filtered through into our local market. We're just below that 64,000 point mark. We've gone up 0.7% or 0.75%, whichever way you'd like to see it on that front. The big gainers really have been the financials, which are 1.2% higher, led up by the banks, which themselves have gone into some positive territory as well. Resources are also on the up, despite gold miners getting a bit of a hangover today, going down 1.3%. So they've lost some, but platinum miners are the positive ones. So you'll see a few of those sitting at the top of the JSE All Share today as well. Industrials taking in some positivity despite the negative tinge you're seeing out in this Asian market picture. Let's talk about the stocks though that we said would go into some positive territory. MTN enjoying things quite a bit today, going up more than 6%. Tsogo also 7.5% higher today, sitting at R5.73. So not too much really to write home about with regards to the stock itself, and it will need a whole lot of those increases in order to do fairly well. But Tsogo and Sun International do lead the gainers today across the JSE All Share. In terms of those that lead the bottom part of the market, remember I said that gold miners are down quite heavily today, 1.33%. A similar picture here then. Harmony has lost more than 3%. Harmony Gold heading lower, unfortunately, and getting a bit of a battering there. Brait is also in the negative counters there, 3.8% weaker. Onto the commodities board then, weakness for platinum and gold, so demand picture perhaps looking not so rosy as it has been over the last couple of days. Will we see gold hit that $2,000 a fine ounce mark again this year? Well, only time will tell, I suppose. Brent crude oil though did head higher. It's now sitting at possibly its highest mark in a year, actually, at these levels. It is at $58.86 a barrel. Of course, the more that continues to increase, a few more worries locally in South Africa, as our petrol price could certainly go higher. Specifically, if this continues to happen, more weakness for the South African rand against the US dollar. If that happens, and that happens in terms of the increase in the Brent crude oil price, we certainly could be paying a whole lot more moving into the remainder of the year. We're down 0.2% against the greenback at 15 Rand and 3 cents. A euro will set you back just over 18 Rand, while a British pound is 20 Rand 40 cents. Just 1.3% higher is the Bitcoin price right now. Jamil Ahmed is the director for investment strategy then at NAGA, and he joins us then live as well. It's an international call to you. Jamil, a good day as well. Markets perhaps taking it a little bit easy now, having seen that whole upheaval and uproar really this year, and that was just from the retail investors saying, look, we're going to find a way to stick it to the man. So is the market perhaps back to normal somewhat?
I would never say never. I think that the market or those retail investors still want that piece of the cake, and we just have to wait to see how that story will unfold when the Treasury Secretary, the former Fed Chair, Janet Yellen, has that meeting, which is supposedly scheduled for later this week. But generally speaking, in the larger global market picture, markets and investors are preferring to enjoy the better news, that more vaccines are being approved, they're being rolled out, they're going to be distributed more widely. We'll find out more over the coming weeks and months on the exact plan. But at the same time, because the distribution of the vaccine has not been that successfully implemented, ironically, it means that the governments and the central banks, stimulus and authorities are going to have to keep things very easy. And that basically means improved accessibility for cash when it comes to investors. And I think this is what ultimately is guiding the market higher. Yes, we have some better news. Things are looking more positive, but we shouldn't also forget that things are not back to normal yet. But because of this, cash is going to remain accessible for investors, and they are more likely to enjoy keeping their money in the stock market for a little while longer.
Yeah, so how important is the stimulus effort then out of the United States?
100% important. If it wasn't for the stimulus plan from Joe Biden just before he was inaugurated roughly 3 weeks ago now, Arabile, this market would not be enjoying this kind of fruits of the labor. I think we will be seeing a completely different market picture because we still have 10 million jobs plus that are missing for the United States economy over the past 1 year. That is astronomical. It's something that we haven't heard of before in our lifetimes. But because of the stimulus packages, because of the checks that are going to be coming through the post, I'm not saying it's going to alleviate all concerns, but it is seen as having more easy accessibility to cash in the system. And in this kind of market environment for investors, cash is king. Cash is everything. And as long as they know there's cash somewhere around, they're more than happy to keep having that cake.
Speaking about cash and its likes, inflation is down in South Africa, or continues to be benign, really. Yes, you have administered prices, fuel price going up, electricity prices bound to go a little bit higher as well in many instances. But the South African Reserve Bank says, well, we've got inflation in check. We don't need to go any lower when it comes to interest rates. And as a matter of fact, the fact that it's higher than the developed world gives us a slight bit of an edge when it comes to how much more we can stimulate South Africa's economy. What do you make of that assessment from the South African Reserve Bank, Jamil?
I think that it's a bit of a fantasy. We're in the world of low interest rates where governments and central banks are doing anything they can to keep policy friendly and accommodative. And the one thing they're right on is that, yes, South Africa certainly will have a higher interest rate differential advantage, and that can help put cash into the market in the longer term. But that cash being invested in the real economy and not hot potato money, that's a big debate that we've seen in the past, that no matter how much stronger the rand might have been or the currency might have appreciated, that doesn't necessarily mean that the economy is doing better. And then you look at the global concerns. Look, I'm sitting somewhere, we're in our third national lockdowns now. This lockdown could be in place for another 2 months. You've got lockdowns across Europe, and you've got a big problem in the United States, even though it's not locking down. That suggests that global demand will not be anywhere near the levels of a recovery in Q1 2021 to what we thought just 6 weeks ago, which for South Africa as an open economy means bigger pressure on external forces. That means that in South Africa's export growth will not be to the momentum that perhaps was helped. And that means that the domestic economy, which is the everyday people on the street, the everyday business, they're the ones that are going to be seen as the heroes of the story, trying to battle the dragon that is the pandemic impacts on the economy. And they need, for that purpose, more accessibility to cash. And that comes through lower interest rate policy.
Certainly is interesting, actually, whether they should or shouldn't really get into it. Of course, they decided to hold earlier this year. Let's get quickly into the final sort of news story. Mario Draghi now getting into politics. One perhaps thinks that this one is a little bit weird, isn't it?
It is. It just proves anything is possible. If anybody was surprised that the former Fed chair has become now the Treasury Secretary of the United States, well, that was seen as somewhat of a path. It might have been not been completely normal, but it was somewhat of a path towards the next position for her of influence. But when it comes to the former ECB president, Mario Draghi, being sworn in to form an Italian government in something like 24 to 48 hours, when nobody even knew of any interest in politics beforehand, it's a press for panic. Definitely. And the Italian situation, as we all know, politically over the past couple of years has not been stable. But nonetheless, investors are okay with this because, again, Draghi was another advocate like Lagarde, who's now the ECB president, like Janet Yellen, like Fed Chair Powell, and a lot of the other central bank authorities, that the real economy is suffering. We need to do as much as we can and what's in our disposal to help those people. And that's where the market's actually reacted more positively to this, although it does show, again, Italian domestic political uncertainty, it is rife. Yeah.
Look, they're not the first. You're quite right. Janet Yellen, Mario Draghi. Now, just look at us. We had Tito Mboweni was governor of the South African Reserve Bank, right? And now he's finance minister too. So clearly, there's a little bit of a hint there as to where to next once you're governor of the Reserve Bank. Hint, hint, lesejahanyaho. Anyway, thank you so much for the time, though, Jamil. Appreciate it. Hopefully, we'll chat very soon again. Jamil Ahmed is the Director of Investment Strategy at NAGA, joining us there to help unpack the market movement.